Good afternoon, everybody. Welcome to Trader Merlin Show for your March 3rd edition, the first official trading day of March. And man, what a doozy. Brutal one out there, and a lot of it tying back to the discussion we've had over the past couple of weeks, which are about market uncertainty, about tariffs, and other issues. So we'll dive into it just straight away. Hope you had a great weekend. There was reason to be optimistic for the crypto space going into the close on Friday. And, of course, over the weekend, we saw some pretty positive things. But that was all erased. Why? Because the bears are back. Now, technically, when we look at the broader markets, the NASDAQ is down in that bearish territory. So is the Russell. And then the S&P is the one that is kind of the most important piece. Now, I'll bring up that one and show you more charts here in just a second. But let me start with kind of what is causing all this. What's the main issue? Exactly, Saba. I made that joke the other day. It's like Oprah Winfrey going, you get a tariff, and you get a tariff, and you get a tariff, to most likely sell off further. If, in fact, he does go through with it at the end of the evening tonight. Oh, are we serious? I'm spinning already? This is ridiculous. I have no clue why I'm getting this, guys. I checked everything over the weekend. I guess I have to go and get AT&T out here to test my setup. Anyway, you gotta be kidding me. I'm sitting here watching the wheel spin for you all, and I know it's just got to be torture because it's torturing me. Yeah, and here's why I'm not. I know it's not me. There we go. I mean, that's my upload speed or download speed is 250, and my upload speed will pop up here in just a second. I have no clue why this should be going in and out. This should be about 180 to 200. Well, still 100 is just plenty for us and what we're doing here today. All right, I guess I got to get IT out here. Sorry, guys. I have a feeling somebody will start leaving me after a while if I don't finish this, as it keeps cutting in and out. I'm not sure what the problem is. All right, let's just go roll through it. As far as political tensions, we talked about this one on the show the other day. The tariff part is going to be huge. And for me as a trader and as an American citizen, I look at these tariffs imposed on Canada as being pretty detrimental in two areas. Number one is it's going to raise the cost of goods and services. It's going to create more inflationary pressure. But number two, it creates bad blood to your neighbors to the north. Now, I know where, yeah, right, Big Ab? Come on, DJ. If you look at where you all live, wherever you live, whether it's an apartment, a condo, a house, a van down by the river, wherever you live, it's kind of important to maintain amicable relationships with your neighbors. Now, of course, if one of them is just a complete idiot and, paints their house some bright yellow, canary yellow, and has all kinds of weird stuff going on and destroys the neighborhood, I get it. That's just a bad neighbor. But for the most part, we're trying to, keep that relationship, especially the ones you literally are touching borders with. It's one thing to piss off Russia or China because they're across the oceans. It doesn't really matter. Yeah, there's business and etc. But they're not literally at your doorstep. And not that there's any threat from Canada or Mexico from like an invasion perspective, but you're just creating a bad relationship with them. And I think that could have ripple effects to our economy. So that's that political tension part that I was talking about. And when you look at the tariff situation, one thing for those of you who are active traders to look at is go out to that currency market and take a peek at what those currencies are doing. So let's go look at the USD CAD. And lately the dollar's been showing pretty good strength against the Canadian dollar. And I think a lot of it is the expectation that Canadian dollar is going to start to take a hit here based off these tariff implementations. And if we continue to get tariff talk and implementation, that Canadian dollar would sell off and therefore US dollar gains strength. It's in the power position. Now, I don't have the Mexican peso on here. I guess I could bring it up. How about the next? Here we go. We'll go peso US dollar. So this is the US dollar against the peso. Let's see how it looks. Nothing really dramatic here on this price chart. So kind of a flat sideways action for the past 6 months or so. So really, the Canadian dollar is a much more globally impactful currency. And right now, it's showing some pain because of what's going on here with the tariff talk. Now, I don't know if it's going to happen. I do believe it will. I'm in that camp now where I think Trump's he uses this as a ploy to get them to come to some concession where he gets what he wants out of them, but we're just not getting it. So maybe that will be alleviated here this evening, but I have a feeling he's going to kind of push on through that. So what did that do? Well, obviously that created a ton of market speculation that things are going down. So let's just dive into our top 8 markets right now. We'll start off with the worst one, which we call the canary in the coal mine, and I had it mapped out for you guys as a kind of double demand zone here. We hit the 1, bounced off it, thought we'd get a little bit of a retest, and today just sprinting towards that lower yellow box you see on your screen here. That low point for today was 2,093, and you notice that the range I had for this box was 2,058. So we did tiptoe into that zone today, coiled out of it, so we did get a nice move back up near the end of the session, but still very, very overall bearish on the Russell, although if you are playing a bounce, this would be a good spot for a potential bounce. Now, this obviously isn't the driver of markets. It's more into tech. Well, 1.91% slide today for the NASDAQ 100. We got that one-day relief rally on Friday, which I was looking for as it came in that demand zone. You know, today, this is where a lot of you have to kind of make your own decision about what you think about how supply and demand zones work. So, for example, you saw today that we just tiptoed down below. I'll put a line across the bottom here just so that I can read the numbers to my podcast folks out online. I have the bottoming tail of today was 20,316 and 3/4 on the NASDAQ 100. And the bottom zone that I had mapped out here for my demand zone was 30,382. So we broke that by a good 30 points today. By a good 70 points today, intraday, but we didn't close down below it. So some would say that has been violated and it's not valid anymore. Others would say we didn't get a close below it. I am in the camp, and I know this might be contrary to what many believe. I believe you got to have a close below it. Because you could sidestep an order and cause it to rip down and then put your order back in. I'm one that wants a close below it. So technically, from my perspective, we haven't broke down below this demand zone because we haven't closed below it. But again, that's to each their own on how you want to choose it. Bottom line is it's definitely looking weaker and weaker and weaker. And again, if the selling pressure continues like this and the skepticism does grow, we're going to see this thing go lower, which means lighten your positions, go defensive, buy some protection with options. But certainly the roaring bull markets of just unbridled optimism seem to have dissipated significantly over the past 2 weeks. And, you know, I expected this to happen. I just didn't expect it to happen this soon in the year. I thought we'd get this probably second quarter is where this chaos and panic would start to roll in it. And maybe it's short-lived. I don't know. Again, that's markets. We'll have to wait and see how it all pans out. But so far, looking like some decent panic on the part of the investors out there. Now, Steve says, I convinced Trump's family is short the market. He talks tariff every chance he can get. Yeah, you know, it's funny. I thought this as well back in Trump's previous administration, because what he would do is like on a Thursday, he would say something really negative on how he's going to tariff China, and the market would just tank. And then on Monday or Tuesday, he'd say, oh, no, everything's fine, and the market would regain all of that and then some. You know, that's bordering on conspiracy theory out there, that are they colluding? Are they forcing this market down? Is Trump doing insider trading when he makes these tweets and these announcements? Very possibly, but, you know, kind of hard to prove. I think I made this point to you guys before. Let's imagine who's on the, let's say, I'll go Margaret, okay? So Margaret just put in the most recent comments, so she's going to be my patsy on the other end of this trade. But let's say Margaret and I are, Margaret's a floor trader, and so's Chris, right? We got Chris Marconi in here. We got Chris and Margaret are institutional floor traders, or maybe family members. We have a close relationship, right? All right, so Chris and Margaret, you guys are brokers, big ones, and Steven, you're my brother. You're a family member. And we go out and we go golfing one day, and on the golf course, the four of us, we get together, and I say something I said, look, I want you guys to keep an eye on my tweets. If I use the word huge, I want you to short everything you can in the markets, because I'm going to issue a bad tweet that day that's going to cause the market to tank. So when you hear when you see the word huge in one of my tweets, just go buy as many puts as you can. Doesn't matter. Short the market. And when you hear me say the word, what's a good word that he likes to use all the time? If I use the word really, R-E-A, really, like, it's going to be really, really, really great. It's going to be great. How about great? I'll use great. So huge is a short term. Great is a bullish term. And all you have to do is follow my tweets. And if you ever see that, you're going to react to that. Who's going to figure that system out? Right? And that's just a blatant, really easy one for you and I to figure out. I could do much more complicated things using social media. There's never any telecommunications between you and I. There's never any of that stuff. but you would be making hundreds of millions of dollars. I mean, I don't know if you guys saw the tweet last night. Let me bring this one up for you. It'll take me just a second to bring it up. This wasn't last night. This was, oh yeah, it was Sunday. So let me show you this tweet here from Trump on Truth Social. This is from his social media site. Let me make it really big for everybody. And it's kind of jumping ahead here in topics, but I wanted to show you multiple things. I guess I didn't put the crypto part in here, so that's fine. So here's what his post was. He tweeted out last night, a U.S. crypto reserve will elevate this critical industry after years of corrupt attacks by the Biden administration, which is why my executive order on digital assets directed the presidential working group to move forward on a strategic crypto reserve that includes XRP, SOL, Ripple, Solana, and Cardano. I will make sure the U.S. is the crypto capital of the world. We are making America great again. And then about 50 minutes after that, he says, and obviously, Bitcoin and Ethereum as other valuable cryptocurrencies will be at the heart of the reserve. I also love Bitcoin and Ethereum. Okay, now, what the hell is our president saying stuff like this for? Right? He does not need to be doing this. This is the job of his crypto team to put together and say what's in the portfolio. I'm pretty sure you would all agree that it would be very easy for Trump to just tell his family, hey, load the boat on Ripple, Solana, Cardano, Bitcoin, and Ethereum. Load the boat on those ones. And if you saw the price action that happened over the weekend, and this, by the way, is why you don't trade futures. Here's what the futures market looked like between Friday and today. Remember, we got that gigantic hammer formation from Friday's session. I was like, man, this is shaping up to be a great weekend for crypto. And it was. Unfortunately, if you trade the futures, you got to get the gap up, and then it tanked. But if you look at what happened on the spot markets, let me bring this up for you. Here's Bitcoin spot market. You had the whole upside move was capitalized on yesterday, right? Big up move on Sunday night. I was just blown away. I was like, oh, here we go. And of course, Reddit's going crazy. All these social media channels are going nuts on it. Yep, and I agree with you, Steve. I think it's flat out manipulation of the markets. It would be very interesting to see. And by the way, there's a guy who I don't even want to mention his name because I don't want you to follow him. He's just this. I'm annoyed by the stuff he posts. He's arrogant. He's a sensationalist and just always creates this. But he did post something yesterday that said there was a really odd trade that happened. It was for $130 million worth of Ethereum, 50x long, right? So it's 50x leverage he's using on Ethereum and like $75 million worth of Bitcoin. So roughly $200 million worth of cryptocurrency was purchased using 50-to-1 leverage just moments before this came out. So yes, without question, there is manipulation. Without question, there is insider trading. And is it the reason that you and I are pissed off about it, Steven and many others here, is because we're not a part of it, right? If I had an app where he could tweet and say, hey, tomorrow I'm talking about Cardano and Ripple, I don't think I would be so upset about it because I'd be loading the boat and getting out every time he tells me to buy and sell. But yeah, he's going to make himself, his family, and those close to him an unbelievable amount of money, not just on cryptocurrency and digital assets, but even things like, we'll talk about Nvidia here shortly. So Chris doesn't believe it. Don't believe there's manipulation? Politicians manipulate the markets, but quietly. True, Stephen. This is just outright shouting from the top of your lungs that things are happening, you know. And I don't believe, as the president, you should be saying things like this. I guess I'm more concerned with the running of the country and feeling that we should be focusing on key issues like, we talked about this on Friday's show. Where let me see if I had a graphic for this. I'm going to put it back up to political tensions. I talked to some friends over the weekend. I have some friends in Italy, I have some friends in Germany, and I have some friends in London. And they were talking about how there's growing talk about how they should boycott U.S. products and services because of what happened in the White House with Zelensky on Friday. And, they give all sorts of reasons why. But can you imagine the impact if all of a sudden European Union's like, hey, well, we're still supporting Ukraine, so is England and other countries, but the U.S. isn't? Well, we're going to exclude you from our consumption patterns, which I thought that would be very interesting, and that adds even more, that adds even more political tension and uncertainty for our markets going forward. So I don't know where it's all going to go, but I do think that forecast we made on January 1st about extreme volatility this year, I might have to upgrade the volatility factor because I think every couple of days you're going to have moves like this where you just have just wild, wild, wild swings going on. Oh, yes. I'm right there with you, Steven, and others. I mean, I would never do anything like that because I'd be insider trading. Yeah. I don't know about that, Lori. Obviously, I think there's certain ways that I would do things that might make the world a better place, but I also don't have anywhere near the global intelligence and knowledge to know the inner workings. Of course, that's why you have a team around you, right? As a president, you put the right people around you. So, for example, I don't know all the details of what's going on between Russia and Ukraine. I hear one side from one news agency. I hear another side for another one. And depending on where you get your news from, that'll tell your narrative. So for me, I think as citizens, we should be looking at multiple sources of news to try to see both sides of the story because the media outlets have really been polarizing here, in my opinion. You're either all in for Ukraine or you're all in for Russia, and one's evil, one's not. I think there's faults on both sides of it, but not my thing. So yeah, and I can't be president anyway. All right, so let me keep going up this list of markets here. I think I had it from worst to first. I think I did. Yeah, there we go. So we didn't even make it to crude oil yet. Let me continue on up. I'm just going to do the indexes because this right here is probably the more interesting chart of the day for me. We've had this sideways consolidation, just not really say consolidation, but just boring range for the markets. All right, boring range for the markets. There's a lot of action. It's gone from 58.10 all the way up to 61.66. So you're looking at 360 point range. Hey, with an S&P futures contract, that's a tremendous amount of money. However, we've been stuck in that range. The days of just nice, solid uptrends that seem to last months and months are over for now. Now, with this S&P chart, we came screaming down today. The intraday low on the S&P was 5,821, and the lower range of that box that I've got drawn is 5,810. So, two things here. Number one, if you are a range-bound trader, you probably loaded the boat here today expecting this S&P to have a bounce. If you were that type of trader, and I think there's definitely some merit to it, you got to be real careful because if we get below 58.10, you can start to see these markets drop pretty quick. There's a lot of fear looming right now, and I think when you have a nervous group, whether that's markets, animals, whatever, they tend to follow the herd. So if we get a sharp break of that 58.10 mark on the S&P, there's a lot of retail investors that are going to just dump, and there's going to be algos that follow that. So you could start to see really sharp percentage days. We talked about it last week on, what's a big down day. Well, we had 2.7 for the Russell today. That is just below my threshold of, wow, that was a bad day. And that is 3%. And that's the number I've always used, right? I've always used the 3%. And we could very easily get those 3% down days and up days much more frequently over the coming months because of the political side and these political tensions that keep going on. So be very careful. I know many of you have huge gains that you've enjoyed over the past couple of years. It would probably be a wise thing to kind of scale back and, maybe just have half of your market exposed or half of your account exposed to the market right now, right? Kind of pull back into cash as a safety mechanism, as a safety feature, because we haven't had a black swan event for quite some time. We have not had a black swan event where the market just pulls the Macaulay Culkin face, screams in pain and agony as it just craters. Last time we had a real black swan, I got to go back to COVID. Right? You got to go all the way back to 2020 with this. That was your black swan. That's the last really big one that I can remember. That's true, Stephen. We were down to 3% at one point. Yep. So this was really your last black swan. We were lock limit down multiple days. That was really, really scary. It was fun. I was very fortunate because I had a big block of puts in place, but I don't have puts in place right now. I don't have puts in place. Unfortunately, I saw that from Lori asked me earlier, I think it was Lori, have I bought puts yet? I have not. And I will, I want to, but I've got a lot of capital tied up in long, so I'm now kind of looking at more defensive. I did sell calls against my MicroStrategy position today at 320. It was great. Perfect timing. I did it early this morning. Right as the market opened up, I grabbed some 320 calls against my position and collected a good amount of premium. And then, as you saw, MicroStrategy, crypto, everything just kind of fell apart. It got pretty ugly there. So let me go up to keep moving up here. Let's go to the crude oil. Crude oil doing what I thought it would do, is continue its downtrend. We talked about the bounce out of this demand zone. I'm going to take this demand zone out because it just barely closed below it, in my opinion. So, and I get to draw the boxes. So there we go. And right now, I mean, you're basically trying to figure out where's that next stop. And there's a lot of layout levels on top of levels. I mean, it really feels like there's a big baseline in crude oil right around $67, which is about $1.30 away from where we're currently at. After that, you got to look way off to the left, and there's some slightly lower levels around $64, but I do think you'll continue to drift lower here. We'll have bounces along the way and then continue to drift lower. I mean, right now, the U.S. is starting to irritate and pick fights with a lot of people, and that usually doesn't end well for a financial market. And we'll see ultimately how it pans out. All right, I see a ton. Chris says, Americans, Europe boycotting American products. I think they already do. It's not like they're buying Chevys or Fords. Oh, true. But we sell a lot more than just Chevys and Fords, right? Could they start boycotting Apple products? They start boycotting Nvidia stuff. I mean, major U.S. corporations could start to feel a bigger hit that I think is outside of the scope of what expectations are. Right now, the expectations are the tariffs are going to create inflation. That's a big one. And that may have some impact on trade with Mexico, Canada, and of course China. Europe kind of jumping into this mix as well. But our political stance might alienate some people and cause some dissent there. And who knows? I just think it all kind of shapes up for a much more bearish few months than it does a bullish argument. If all of a sudden this gets resolved, everyone's like, oh, okay, great, we're all peaceful now, and tariffs are gone, and everyone's going to just hug, and there's no more war, then markets will rally aggressively. But I just don't see that as a high probability prospect right now. All right, well, a couple more, and then I'll get to a bunch of list of questions there. Talk about that 10-year yield. Trump's got to be loving this. We talked about that break, and this looks just like what was the other chart? We just had it up there. Just like the Russell, right? The Russell broke one demand zone and shot down to the next one. You look at that 10-year yield. We talked about this getting right down to that 4.15, just below 4.2, and here we are sitting at that one. Of course, now I guess it's where do we create that next step? And of course, that next big step is going to be this turning point from October 16th, and there's your next cascading decline here for the 10-year. So all in all, it's been pretty following the rules with regards to break a demand zone, find the next, break a demand zone, find the next, and keep on going and going and going and going. So this is in theory, very good for the markets, right? You want to see this. You want to see more decline for that 10-year. That makes housing more affordable. That means people can borrow more money, and that stimulates growth ultimately. I don't know if you guys saw it, but the Atlanta Fed had, I think the number was negative 2.8. Let me just see if I can find it for you. They gave their forecast for GDP numbers, and it looked pretty bad. Here it is. Here's the graphic. This is the Atlanta Fed's GDP estimates. And notice what they're expecting. I mean, it really just changed here. Their estimate was, very little growth. And now all of a sudden they dropped to negative 1.8, and now it's negative 2.8. So for whatever reason, this uncertainty that we're facing, they really lowered their forecast, and this should be concerning for a lot of people. If our GDP goes into a 2.8% contraction, obviously that is going to have a far rippling effect on our economy and our markets, right? Which does create opportunity for those who are short, but most aren't short at this moment in time. And we're almost at the top here for the top 8. Dollar index, we had a huge pop up on Thursday and Friday, and the dollar index was looking optimistic because we kind of broke through what looked like the most recent pivot, but here we are coming back down, and we'll probably continue this trend to the downside here and keep on moving. So there we go. And let's see, top 2, you've got gold. All right, gold is looking pretty darn good today, although it did have a pretty aggressive 4-day slide, but you're up today about $52 per ounce on gold, 1.85% to $2,900, so that's good. And then Bitcoin. This is a really odd chart, by the way, because you have such a monstrous gap up. You had just a huge gap up on the futures markets. We gapped up 11.81% on Bitcoin, and currently we're only up 1.59. So this has been an abrupt about face. Like I said, luckily I sold my MicroStrategy calls early on today. And then, MicroStrategy was having a great day and then just gave it all back. And you see a lot of pain here. We'll talk about some of the FANG stocks. GDP number in March. There's once a month. So there's an advance, there's a preliminary, and then there's the final, and then there's a break, and then they start all over again. So there's this kind of 3-week cycle. But we should have, let's go and bring up that Forex factor, because I want to see the final GDP numbers. Let me scroll through it. So I don't know if you guys use Forex Factory, but they've got some really cool features here where you can just filter through and take off all the ones that don't want and just add in things like there's U.S. growth. So I'm going to look for U.S. growth, and it should be coming out the last week of this month, but I'm going to real quickly just jump and find it. So there's your final GDP number, and I think you asked when was the last time we were negative 2.8. Well, obviously COVID, yeah, we were negative 33. But let's go more reasonable numbers, right? Let's go since COVID. How's it looked? We were back to negative 1.7 here in 2022, and I'll scroll this over to pre-COVID. Scrolling backwards here, there really wasn't a lot of negative stuff. I'm going all the way back into 2000. We had a negative 2.8 in June of 2014. We had a 4 quarters of negativity in 2008. Of course, that was the financial crisis. December of 2008, we were negative 0.4. In March, our reading was negative 6.6. And then negative 5.5. And then we had negative 0.7. So there was this patch back here where we were negative, but really we haven't done anything painful since 2020, except for the COVID one, right? So, yeah, that was kind of shocking. You see Atlanta Fed really post some pretty crazy numbers. Then again, this is forecast, right? This is the forecast. They're going to see, what was it? Estimate for 2025 Q1 quarterly percent change. Whew. Yeah, not liking that one. And let's see. So we talked about the Bitcoin. We got that one all the way. Let's go into a couple other pieces here, and I'm going to dive into this bad boy, which is the Nvidia Woes. So I have, as you guys know, I've got puts sold on Nvidia at 115. We had an 8% down day on Nvidia. We'll bring up the Nvidia chart here. Now, it was looking great on Friday. I was stoked on the puts that I had sold, and now I'm actually in the money on these. And I've got all the way. I got till Friday, so this is not a good spot for me to be in. Granted, I'm okay. I don't care. I think if I get at 115, fine. If it continues to plummet the rest of the week, I'm actually sell some more if it gets down to about 100 mark. So I'm not too worried on this one. But the issue with Nvidia, let me get these lines out of here. The issue with Nvidia is there's a lot of talk about how their chips are making it to places where they're not supposed to make it, and there's investigations going into some of their partners and Dell and some other ones. Where they could see further action from President Trump because that may be deemed to be violating the terms of their not agreement, but the laws that were passed under the Biden administration under the CHIPS Act, saying, hey, you can't sell to these people. It comes as a surprise to literally no one on this face of the earth that China actually has these products that they're not supposed to have, right? Is anyone shocked about this? That, China's not supposed to have these, H100s and A100 chips, but they have them. No big deal there. So there's talk that there might be further retaliation, not only from the U.S., but also from other governments because NVIDIA is giving chips to countries that shouldn't be having them. That's part of that fear today. Also, Broadcom was talking about doing, I saw some headline, Big Eb, you probably know more about this one, but you had AVGO was talking about using Intel's plants to manufacture chips in the States, which I'm sure would get a huge support from President Trump and any U.S. regulators. Like, oh yes, we want to have chips done in-house. Let's support Intel. We've already spent billions of dollars with the CHIP Act for Intel, so let's get some bang for our buck. And I was surprised to see Broadcom, which is Avgo, sell off so much today. It was down 6%. And then, of course, you have INTC, which started off great. Ultimately was down 4% on the day, but having a nice little resurgence here on talks that they might be splitting up their business. We talked about that, and maybe getting some more production usage out of their factories. All right, I went through it all. Let me let's see here. Heard some realtor turning down sellers because no bandwidth to cover showings. Wow, what realtor is going to turn down a customer? Jeez. And yeah, so March 28th, I think I had that up there. Let me bring it up, the date. Yes, March 28th. Friday the 28th is when we get the final GDP number, which, we already have a pretty good idea of what it is. But what I'd be more interested is to see what the expectations are for it going forward. Let's see. FANG stocks are Magnificent 7. That's interesting. You probably say that because Colin Teddards, right? Colin Teddards is going back to the FANG stocks. I don't know. I like the Magnificent 7. I just think it's easy to say. And plus, I've got my watch list there, and I think that they're all really important. So, yeah. Yeah, Avgo is reporting on Thursday. So Thursday, since it's a NASDAQ stock, it should be aftermarket. But yes, they report today. Nvidia is too good to be true. I don't know if I'd say it's too good to be true, but they've got this monopoly. You have this wonderful business model that puts you in the big driver's seat, and they've been reaping the rewards. And ultimately that will start to slow down. We've talked about that before. It'll start to slow down, but for now, how do you not look at Nvidia as an opportunity on pullbacks, right? I wouldn't jump on an all-time highs, which is why picking some up at 115, I mentioned I was okay with, which is a retracement of roughly, come on, Merlin, roughly 25%. So I'm okay with a 25% discount on Nvidia, even though it is still a very lofty price compared to where it has been historically. I see their dominance being more and more asserted. Now, other companies like MicroStrategy, this is just purely a speculative options play that I've been doing. This isn't a company that has a lot of merit. I look at something like Tesla, which I have extremely bullish horizons for the long term. I mentioned this one as well. I'm stoked to buy it at 250. I hope it falls there and I get executed at 250 this week. I think that there'll be a turnaround at some point here for Tesla. It's just given the angst towards Mr. Musk and his actions and his words and his sporadic chaos. I think a lot of people are still going to continue to push Tesla shares down, which is fine. Long term, they'll come out of this smelling like roses. When is AMD going to turn around? I love their products for PC. I have no idea. I couldn't tell you when AMD is going to turn around. I would argue that they had a pretty good run, right? From here to 2022 up to its peak that they established in 2024, AMD had a 316% gain. Phenomenal. I'm not entrenched in the chip area to know exactly what they're all doing, but this thing looks pretty brutal. You to my point, I think you're referencing this to my comment I just made. It's down 56%, and it's right in an area of demand that goes back to 2013. I personally would probably find that an attractive target, but I got to know I'm going counter trend. Right? There's the trend is your friend until the bend at the end, as everybody knows. Well, that chart is telling me I need to stay short AMD until it proves me otherwise. So I don't know if I would be comfortable with AMD quite yet. And I would probably want to, if I'm going to be a long-term holder, I think I would have to do a bit more research on the fundamentals of it to see why it's in fact dipping like this. Because Savas has got their new X3D chips and GPUs. Well, that's great, but if no one else is buying them, then stock's going to look like that. Nvidia looking pretty bearish on the monthly chart. It's really been that consolidation. We had such huge magnified runs to the upside, and now it just feels like that momentum is stalled. So if you look here on the monthly time frame, which I usually don't look at monthlies, I don't think that the trend is over, but it's getting to that period where you look at this price chart and like, ooh, it's definitely starting to look much, much weaker. The momentum is just not there anymore. And you could add on all your different moving averages or whatever you want to look at to help support your decision, but I like the weekly myself because I think it paints a little bit better picture of the intermediate. So as of this week, literally today, we're starting to see some changes in the design of the trend of Nvidia. It's been impulse correction, impulse correction, impulse correction, impulse, but this impulse did not break a high. That's bad, right? The fact we didn't break a high here the week of February 18th, that has me a little concerned with the Nvidia chart. Now we're coming back down towards that baseline, which is this low point from the week of February 3rd. That low point is $113. So really below 113, that's when it starts to say their trend is broken. We've actually made some new pivot swing lows, and that could be concerning for them. Good news is I only have till Friday, so I shouldn't incur too much damage if it starts to fall, but you just never know. You just never know. And I saw someone mention moving averages. Let's go put in some in here. Put on some moving averages. We'll do simple, and I'll put in the 200 since that's such a popular one for most people. And right now, it should be above. Let's go. Yeah. There you go. So if you're using Nvidia on a weekly, I mean, you have such a long time to go till you get there. Better to do this on a daily time frame because it's obviously has shorter data points. And from that perspective, we've actually broken down below its 200 period moving average, which a lot of people would look at this and look at that and say, oh, it's now below its 200. That means people will be liquidating it because a lot of institutions do not want to hold something below its 200-day moving average. But this is Nvidia. I think that's a bit of a different story than kind of a no-name brand, no-name stock, no-name company. Robert, you're late. We covered that. We covered why. You have quite a few things. We started off with political tensions. Just what's going on between our neighbors to the north, Canada and Mexico. They're going to get tariffs starting tonight. You also have, there are a lot of people who are really upset with the way that Trump handled the Zelensky thing. Some people thought it was great. Some people thought it was terrible. Bottom line is the rest of Europe is supporting Ukraine, and the U.S. seems like it's kind of walking away from that. And I mentioned earlier I have some friends in Europe. The chatter is to boycott U.S. products, which could hurt us much more down the road. There's that tariffs we just talked about. No. I don't know what the overall impact will be. I think the knee-jerk reaction as far as what the impact will be for the Mexican markets and Canadian markets is we're probably going to see both their currencies start to fall more aggressively. And then there'll probably be some retaliatory tariffs on their part. And that's when the uncertainty rises, right? What's that knee-jerk reaction? What sort of angst is put out there by these markets to help push or to manipulate these markets and move them one way or the other? So I just say buckle up. Buckle up. It's going to be a real wild ride, particularly for those of you who are in the crypto space. I will show you, I'm showing you the crypto numbers here. Cardano down 25% in the last 24 hours. Solana down 20%. I mean, Solana had gained over 20% and has given it all back in 24 hours. This is a huge bearish formation right here. Ripple talks about it being added to the strategic crypto reserve. It should not in any way, shape, or form be in that strategic crypto reserve. It does not belong there. But notice all this negative, down 17, 16, 15, 14. I mean, these are huge down days today. But what you guys are missing in all this is there was a huge up day yesterday, right? Because crypto markets trade 24/7, 365. There's no downtime for crypto. Whereas the futures markets, you're only going to see this. Oh, it's up 1.97% today. No, it's not. Is this the black swan? No, not at all. No problem, Liz. Good to see you. Yeah, Trump talks. Well, Trump's got a couple talks this week, but I would not call this a black swan. Not at all. No way. Black swan. I mean, equity markets down 2%. Chump change. A black swan, I think, would be where you come in and you're like, oh, we're down, we're lock limit down. The markets, I can't trade any of my positions because markets are locked down. That's a black swan. And we're not there yet. I do think we'll have a lock limit down at least one time this year. At least once. Damiani says, Ripple put a lot into this campaign. Absolutely. But remember, Ripple has billions of dollars to spend to do this. That's why a lot of people are upset about it, because Ripple Labs owns 42% of all of the Ripple coins. If Ripple gets added to the strategic reserve, the government's going to be forced to buy Ripple, and they're buying it from a company. That should not be part of a strategic reserve. That's like the U.S. government saying, oh, well, we've got a strategic reserve of Apple and Intel shares. Well, I don't think that they should really do that either. It plays favorites and opens the door to a lot more manipulation. Bitcoin's not controlled by anybody. There is no depository or repository where you can say, I'm going to buy 50,000 Bitcoin. This is a global market. It's like gold, right? There is no central entity that controls it. There are miners that extract gold from the ground, and there are miners that extract crypto from the code, and that is a predictable release schedule. So only one that should be in there would be Bitcoin, in my opinion. Check Carney's GDP in question, including U.S. I don't know what you mean by check the GDPs of them. Obviously, ours is the biggest. But to me, it's not, if you look at what I mentioned, like let's say Europe, the European countries, because of the U.S. sounding like they're not going to support Ukraine to the extent they were. And granted, we were putting more money into the Ukraine than anybody else, whether it was military or actual cash. If we stop that, then Europe's kind of on the hook now and like, oh, well, shoot, we're going to keep doing it without the Americans. Therefore, they might shun us a little bit with regards to purchases of goods, services, vacations, and another bad reputation part. While they may not be the largest economy in the world, it's just a significant decline in consumption of goods and services from the United States could have a big impact on these equity markets, which of course translates to you and me, because a big decline in the equity markets or just the economy would cause layoffs, and that could start more of an economic downward spiral here in the U.S. So, kind of thinking how all these dominoes start to fall one after the other. I think today was kind of that wake-up call that these dominoes are about to fall, and we have to try to speculate on which way they're going to go. S&P is down 0.5% year to date. Some more coming in March. Yeah, well, in February is generally a negative month. It's not really a positive one. We had a great January. If you put these side by side here and go monthly, let me go bring up our S&P futures here and I'll go up to a monthly just so we can see the one bar at a time. We started off the year with this great, nice, big green candle. And then all of a sudden erased all of that. And you followed that up with another red candle here. So, yeah, it's certainly not a this Bitcoin, excuse me. I had ES on here. There you go. That's better. That's more what it should look like. We had that nice big green candle, and then a smaller red one, and then a bigger red one to start month of March. I mean, we've already moved more to the downside in March than we have the closing of February. So, something to keep an eye on. Should be interesting. Should be exciting. I do expect more pain ahead. Let me see what you guys' comments are. I wish you'd be quiet for a few days. Your former professor works for Trump again. Oh, he does? Oh, man. He's out of prison, huh? Made it out of jail. Crazy. Let's see. Seems like more just because we rally 40 points and we fall 170. That's an enormous move in the ES. Yeah. And again, it's volatility. So I'm hoping I can free up some time in my schedule because I'd actually like to just get more into intraday swings. I mean, these intraday movements are fantastic, and they seem to be pretty good for half a day. It's either a bullish up morning or bearish morning, and then you get the reversal of it. We've had just lots of volatility, and I love it. Chase, SPX currently looks like a massive double top. Bitcoin already printed one and broke below. SPX to follow. Well, I don't know if SPX necessarily is going to be the one that's leading the market or Bitcoin's market. If we go to that daily time frame, we talked about that being, it wasn't necessarily the SPX, but you could argue that's a double top. I would argue it's just channeling kind of slightly upward here. That's why I've been liking the futures side of things. It's a little bit more channel-based, but you can almost say it's a triple top on that SPX. Until it gets out below this range, it doesn't really mean too much to me because a double top can turn to a triple, quadruple, quintuple, and keep making more and more tops. So this is the chart that I'm focusing on the most right now for the market. And it does, the way things are going, it does feel like we're going to break down below this week or sometime very soon, get below that 5810, and then we'll really start searching for a floor. We've got some levels that are a long ways away. 5200. Well, 600 point drop is over 10%. And it could happen. It could happen, absolutely. Market says future traders and zero DTE traders are killing it. Yeah. Oh, I'm sure some are. Some are losing, right? It's that double-edged game, but there's just so much volatility. It makes the options and futures markets, extremely lucrative and tons of volatility. For the asset I'm watching, I have 19 that have daily bearish engulfing candles today. Yep. I think everyone did today, Sava. Wild day. A wild day. Let's see what tomorrow will bring you. I got to go back to my economic calendar here and get to the 4th of... we have nothing for real growth on U.S. Remove the filters here. There we go. So tomorrow, you notice most of it looks pretty quiet. You do have at 6 p.m. Pacific time, so that'll be 9 o'clock Eastern time. You have President Trump will be speaking. Good news is the markets will be closed, except for crypto and some of the futures markets. So that's going to be tomorrow night. Other than that, nothing else really going on for the U.S. markets. You see here the Australian markets have a GDP number coming out, but that's going to be after we do our show tomorrow. So really not a lot on the table for tomorrow. Now I'll show you your earnings calendar here. So you can see what's cooking for tomorrow's earnings announcements. We do have a couple names that are starting to show up later on in the week, but if you're trading EV companies, you've got NIO reporting, and then a lot of retail stuff. You have Target, you've got Best Buy, you've got Nordstrom's, AutoZone, Ross Stores, just to name a few. So there are certainly a lot of retail sales numbers coming out tomorrow, and most of those are going to be happening actually before market open. You got AutoZone, actually it's a mix. Target, Bed Bath & Beyond, or Best Buy, and AutoZone are coming out before market open, and then you have Nordstrom's and Ross Stores coming out after market close. All right, that's going to do it for me, everybody. Wild day. I'm hoping for a little calmer one tomorrow. We'll see what happens. Again, those tariffs are supposed to go into effect tonight. So we'll see if that actually starts to create some narrative with Canada, with Mexico, with China, maybe with Europe, and what the impacts might be. If there's retaliatory stuff done right away, who knows what's going to happen. Do they open up the borders coming into the United States and just say, everybody have it? I mean, I have no idea what to expect from this stuff. We'll see how it goes. But certainly volatility is probably, volatility measure should be high. If we look at the VIX, by the way, the VIX is up 16% today. But keep this in mind, everyone. And I mentioned this many times. The historical numbers for VIX are 40 and 20. When VIX is below 20, that means markets are complacent, they're way too overbought, and most likely going to come down. Well, they were, below 20 for a very long period of time. Now we're back above it. So today we're at 22.78. That's not oversold. If you get above 40, that is where the markets have been oversold. So there's the old mantra is, when VIX is low, meaning below 20, time to go. And VIX is high, time to buy, meaning the markets have crashed. So we've got a long way to get to 40 from current levels on this VIX. That would take another 75% move up in the VIX, but as you guys have seen in the past, that can happen rather quickly in these markets. So just wanted to share that one with you as we finish up today. Where am I going to buy my hot sauce? Going to make your own. Make your own hot sauce. I've been making hot powder, and actually I like it better than hot sauce. I've been using, I grow habaneros, ghost peppers, serranos, jalapenos, and I think it's habaneros, and I have another one, and Thai chilies, and Tabasco chilies. And I take all the ones I'm not cooking with, and I dry them, and I throw them in a NutriBullet, and I make just kind of this mixed powder. I've now made two. I have one that's a milder one and one that's really hot, and I just sprinkle it on top of foods. It's so much better than sauce because I don't get that vinegary flavor. I just get the warmth from the peppers. Anyway, something new. All right, that's going to do it for me, everybody. I think I got all the topics I wanted to get out of the way. And, I think the bottom line for all of us is this right here, just uncertainty. It's just how do we digest the market? How do we play it? And just to say, play it safe. I would scale back a little bit here until some of the dust settles from these actions. They may get resolved. They may not. They may cause further pain. But bottom line is, we're traders, so we can capitalize on whatever.